Hey everybody, want to talk to you today about trading long vertical spreads using thinkorswim web. Before we do so though, let me just mention a few important things. One, equity and index options carry a high level of risk and are not suitable for all investors. And the material today is for general informational and educational purposes only. We'll look at individual trades. They're samples, they're examples, they're not recommendations. And this is paper money we'll be using on thinkorswim web. And that is for educational purposes only. Schwab does not recommend the use of technical analysis as a sole means of investment research, and all investing involves risk, including loss of principal. So let's head on over to thinkorswim web. So here's thinkorswim web, and let's just pull up a chart. And if we want to pull up a chart, I can go up and put in a symbol. And for our example trade here, I'm going to put in GE, and I'm going to just minimize this left-hand column here as well. So here we're looking at the chart of GE, and my assumption here that we're going to go with is that this is GE right now is bouncing over here and is going to be heading up. It's going to be a bullish trade. So let's look at doing a long call vertical spread on GE. How do I do so? Go to the left-hand column where it says trade. Click on trade. Now I can scroll down and I can see, you scroll down, there's a whole bunch of stuff, but up here, we've got the option chain. I got to open up that option chain if it's not already open for you. I'm going to click on that and I can see different expiration dates. Click on the open up the expiration date that you want here. So it brings that up and you can control, how many strikes are showing here. Maybe we don't want so many strikes. We'll do that. And there we go. Now, there's a couple ways to do it. If I want to do a long call vertical, I could just click on vertical right down here below that, and it'll bring up a vertical spread. And it's real nice. It sets it up for you there. Now, it doesn't know what strikes exactly you want to do, so you got to adjust your strikes here on that. So that's certainly one way to do it. Let me delete this and show you a different way, though. If you know what strikes you want, you can go, well, I want to click on the 360 strike. I'm going to click on the ask price because I'm going to buy that one. And I'm going to click on the 370. I'm going to click on the bid price of that because that's the one I'm going to sell. So I have a 360, 370 there. Or if I want to make a mistake and go, well, I don't want 360, 370. I want 360, 380. I can go down here and I can always change the price right down there. That's a vertical spread. It tells me buy vertical. Click on the ask price of the legs you want to buy. Click on the bid price of the bid legs you want to sell. By the way, this video isn't on short verticals, but I would just do the opposite in the case of a short vertical. Then I'd have the lower strike in this case be the sell and the higher strike to buy. But in this case, it's a long vertical. We want the stock to go up. It's a bullish trade. Ideally, the stock goes up above our upper strike price. And there we go. We could, if we wanted to, we could tweak it, change the limit price on that, make it instead of a day order, good till cancel order. I can do that if I want to. The other thing I could do, by the way, is if I want to put an exit order on this, I can do that as well. I can say, I want to get out if the stock, say, well, let's look at the chart here real quickly. Let's say the stock drops down below, we'll give it a little wiggle room below the 360 level, about 357. Well, let's do that. So let me go back here. I'm going to click on a first trigger sequential order. I'm going to click on that, and let me get rid of this. I don't want that one. I just want the buy order, the buy verticals to get in, and I want the sell order to exit out of this. Where do I want to exit? Well, I want to exit if the stock, the underlying stock, goes below 357. So I'm just going to make this a market order. I'm going to make it good till canceled. And it says market order has to have a daytime in force, but I'm going to add an order rule to that, which is going to allow me to bypass that. It says I'm going to submit, not in date and time, but if the mark or the price of the underlying stock goes at or below, and we said 357. So I'm going to type in 357 here and review that order. I have two orders. I have my buy order, my order to enter the trade, and I have an order to exit the trade right there. And that order to exit has some rules attached to it if it goes below 357. And then what I can do is I can then go and I can submit that order if I want, or if I want to, I could say I can tweak the price a little bit just to kind of help ensure I get a fill. I'm going to click on send in the bottom right portion of the page, and sure enough, it filled. And there we go. And now if I look at GE, which I have up here already, what I could see at my positions, I could see my current position, these two legs of the spread, and I can also see I have a working order, which would get me out of the trade if I wanted to get out. Now, if I want to do a bearish trade that is a long put vertical, it'd be very similar. So I'm going to go through this one a little bit more quickly. I'm just going to look at Nextera Energy real quick. If I want to look at the chart, I can click on the left side. I can say, well, it was going up and now it's starting to go back down. We're down a little bit today. It's rolling over. I want to do a bearish trade on this. How do you do it? Go to the trade tab. I'm going to go to the option chain, open up that option chain. And again, I'll go to the monthly contracts here. Of course, you can choose whatever expiration date you want on this. And I'm going to go and I'm going to click on whatever, prices I want. Remember, I'm going to click on the ask price of the one I'm going to buy and the bid price of the one I'm going to want to sell. In this case, I'm going to click on the 350 ask and the 350, that's the ask price for the 8750 contract. I'm going to click on that bid price on the 85. That's a long put vertical spread. Now, I can do that. Of course, I can adjust the prices if I want on that. And then I can review. And if I want to send that, I can. Or I could do the same thing. And I'm not going to take the time to do it right now. But I could, again, click on First Triggers sequential order, bring in another order. Just remember, with any stop price, any exit order, it's not guaranteeing me I'm going to get out exactly at that price when I put in a stop price. The stock could gap way up or way down, and so these are market orders we're doing, okay? And so that's how that works. But if I want to send that order, I can click on send the order, and there we go. We have a long put vertical spread on Nextera there. It's not that difficult on actually using this thinkorswim web to place long vertical spreads, either long call verticals or long put verticals. Either way, just make sure you know your risks, and appreciate you joining me today. We'll see you next time. Bye-bye, everybody.